Big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure.
The narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that is really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another Trump administration.
Hi, Dewald. What is all this FOMO about? Should I buy Bitcoin now?
Are you smoking your socks? You should rather watch my show. You should rather watch my show.
All right, legends. I know a late live stream here on a Tuesday, okay? I know people are going to make comments to say, why are you so late today? Things happens, but I'm here to do some technical analysis, right? This could be a short and powerful live stream, just analyzing the levels where we are. Can we get a bounce potentially? Is it possible? Is there a possibility, as per the thumbnail, that we can get a bounce before we claim the low? Or are we just building up impulses here to the downside and we're going to fall down? Right, legends? As per, hit the like over here, smash up that like button on your way in. Let's do some technical analysis here on the price of Bitcoin. I was also doing, I'm not finished yet, but I was doing some Elliott wave counts here on XRP as well. I have seen a lot of requests come in. Dewald, please look at XRP. Where are we? Is it still in buy zone? Are we going to take the dump? It's holding its ground. It actually looks bullish. So, I started with some Elliott wave counts, also just updating some of the old stuff that I had over there so I can share that. Right, legends. Also, what I'm looking at over here is USDT dominance. Okay. For those... Wait, let me do this. That's better. Right. Want to get the real estate here in the screen. For those that do not know what USDT dominance is, okay? Market cap USDT dominance. It basically means, because I know there's a lot of new people joining the live stream and they've got a lot of questions. And if you do know, just please entertain me over here. Right, legends. USDT dominance. USDT goes up. Price crypto as a whole goes down. USD dominance goes down. Bitcoin and the altcoins and everything goes up. So what this basically means is that when it goes up, people are basically selling their crypto and they are holding USDT stablecoin. So they're basically selling off their portfolios and they're going back into stable coins. So you don't really want the USDT dominance to go up. You want it to go down, right? Because that means then people are investing. They're buying their altcoins. They're investing in Bitcoin, Ethereum, and the stupid meme coins that gets launched, whatever the case might be. So the one thing I want to highlight over here, legends, is if I go onto the weekly time frame, I just want to do a quick larger time frame recap here on USDT dominance since the inception. The start, when it was born, okay, of USDT dominance, it has never, ever lost this trend on the regular scale, okay? Because I know there's some people that's going to say, Dewald, but what about the log scale? Let's just focus on the regular scale here. When USD dominance came to this little area over here, we thought, okay, this is it. For the first time in history, we're losing the trend. We're going down. And what ended up happening, okay, the rest is history. If I zoom into this price action, you can see we created a double bottom. Right, I've got it circled there for everyone. You create a double bottom, and double bottoms are usually bullish bounces back to the upside. So now you can see crypto is suffering. Bitcoin is tumbling to the downside. Altcoins are bleeding out because USDT dominance is going up. Right, so the good news is we have massive resistance above. Okay, massive resistance. So for Bitcoin, to find its feet at the levels where it is now, whether that be $76,000, $72,000, maybe we go back down for one more low and we claim maybe $72,000 area, maybe even $68,000 area. What you would like to see is for USDT dominance to reject inside resistance. It is a proven resistance box, and I mean this resistance is from 2022, so it's a 3-year, almost a 3-year resistance line that's running over here, because there's one or two things that's going to happen, legends. It needs to find resistance. Maybe it creates a fake out like it did over here. It creates a fake out. It smashes into the resistance and it rejects. Although this is a double bottom, it is a sign of weakness as well. Usually with double bottoms, you do get a bounce, okay, but that is already a sign of weakness. You've now, for the first time, lost momentum. Often what happens is when you start losing momentum and you break the trend to the downside and it gets that spring point back inside the trend, it often creates a lower high and it falls back down. It's a scenario that happens often, but it's never guaranteed. Okay, so from a more bullish case perspective for USDT dominance, but bearish for crypto, what you would like to see, maybe we're going to have a little bit of a pullback and have that small little relief rally, just to get the altcoin shaking up again. And Bitcoin, it looks like it's going to, continue momentum here to the upside. It makes the world happy again, and then it continues back here to the upside. It has the fake out that scares the crap out of everyone. Okay, we're breaking out. It's the end. We're going into a bear market. Okay, you have the fake out and then you lose it, right? That would be absolutely amazing for crypto as a whole. Obviously, okay, guys, and I'm using simple technical analysis over here, you do not want to see this. Because if it breaks out properly, it could flip this area into support, okay, and then bear market is on. Okay, it could come and claim the highs even over here. So a very important zone, round about, let's call it 6.4% here on the USDT dominance. Okay, so basically, legends, for the bull market to continue to the upside, it has to reject. If it's going to break out, it's not going to look good for crypto as a whole. Right, let's go back here onto the price of Bitcoin. Let's go and analyze the situation. Let me take the text box out, take the brushes away. Let me say hi to the beautiful community. Let's start. Evening, Shil, welcome to the live stream. Mr. Junior, ooh, it's late and I appreciate you being here. Thank you so much. Mod in the house. Alexander, is he here? I remember Alex. Where's Alex? Mr. Alex. Hello, Legends. I joined Legends Pro today. Absolute wonderful. Welcome to the Legends Pro community. Alex, if I'm not mistaken, I think you have been following me almost since the beginning. Yeah, you go. I am glad to be with the Legends. I'm one of the first subscribers of Dewald. I appreciate it. I remember seeing your name. It looks very familiar, and you are always here supporting the channel. So thank you so much. Welcome to the Legends Pro community. And feel free to ask any questions. And I'm not sure if you've already noticed that we have a very powerful, helpful community inside of our Legends Pro community. Okay, you're surrounding yourself with like-minded people. For the pure technical analysis, welcome, man. The watch eye, Dewald. Let's analyze the Bitcoin chart from a day trading perspective. Yes, absolutely. I mean, Legends, we can speculate. I just want to make it clear. We can speculate here on so many scenarios. There is, okay, if you look at this little pivot over here, there are many scenarios that we could speculate on. Is this an A, B, C in a contracting move? Is this a W, X, Y that is finished over here? Or is this forming a larger W, X, and then we go down for a Y? There is so many scenarios. Which one do you believe? Which one is actually going to play out? And it's not really about what you believe, right? It's about trading the levels with good risk management. At the end of the day, what you want to do as a day trader, and I'm specifically using the word day trader, is because you typically do one trade a day. Okay, you get in, you get out, you take your profits, you look for next trading scenario, and day trader basically stems from placing a trade in the same day. You get in and you get out more or less during the same day. That's where day trading comes from. Okay, so legends, what is most important is analyzing now this local structure over here. Okay, identifying the levels for potential bounce. Where do we need to take profits? You basically, you get in, you get out, you call it a day. Right, so yes, love it when people say, let's analyze it from a day trading perspective. Yay, Dewald, it's on. On this picture, you look like F1 driver. Okay, thank you so much. Well, well you also look like a F1 driver over here. Right, socks. Yes, let's not smoke our socks today. Vitality, if no rate cuts, it is bullish. 88K bull trap. Yes, I mean, I know we've got CPI data coming out tomorrow. Is it going to be bullish? Is it going to be bearish? Legends, I mean, we had, not CPI, the interest rate decision. Sorry, my bad. The interest rate decision is tomorrow. Jerome Powell will be speaking with a press conference tomorrow. And I'm not sure if I'm going to be live during that time. I'm still deciding because I know that Andy said he wants to go live. And usually when Andy and myself go live during the same time, like now, I think Andy is live at the moment. I needed to get the live stream in here before I go to bed. Okay. But right, legends, I might go live. Let's see. At the end of the day, we are building up our own communities. Hello, do you think we will first go to 87K on BTC before claiming the lows? Because at 87, we have so much liquidity. Chris, it's a very interesting decision. It's a very interesting question, okay? And you are actually tickling my psychology, the psychology side of myself. From a psychology perspective, for me, that would be the best move. Okay. If you have to put yourself in the shoes of a market maker, what is the best way to stuff over retail traders? The best way to stuff over retail traders and create absolute confusion and panic and fear is the following scenario. You have made a low. And I can imagine that there is some liquidity below this low, okay? And it could be a decent amount. But I think there's way too many people that believe that the bull market is finished. So there's a lot of shorts piling up here. Liquidity above every damn peak here. There's just liquidity building up everywhere. Liquidity building up. Because I think the sentiment, if you just look at fear and greed index, the sentiment is extremely bearish, which tells me that there's most likely more short liquidity building up. So what would be the best psychology move for market makers? Put yourself in the shoes of a market maker, right? If you had $1 trillion to move the market with, and you could just deploy cash or take cash out, to move the market and create confusion, what would you do? What would your next move be? My next move, if I was a market maker with $1 trillion, $2 trillion, and I had the power to move the market and create confusion, okay, is to keep this low protected for now. There's not enough liquidity, okay? There's not enough yet. So my plan is I want to take the low. That's my plan. But there's not enough liquidity here for me at the moment. Where's the most amount of liquidity above this high? Okay, it's from where price is at the moment, the most of amount of liquidity is above this high. It's just stacking up here. Like, there's millions, hundreds of millions of dollars of liquidity over here. So what would I do as a market maker? And this is purely psychology, but it does align with one of the Elliott wave scenarios that I'm keeping an eye on. I would keep the low protected. I would create a bullish continuation to the upside, making people believe that we are continuing. I would even smash this $86,000 level that everyone is watching. I would break it, make people believe that the low is in, make people believe that the bull market is continuing. and you come and you grab this liquidity. Okay. And then price, for some reason, starts finding weakness. And I can just imagine, okay, you have to put your imagination cap on. Bull market is back. We've claimed $86,000. Low is in. I can just imagine all the thumbnails, the green thumbnails, and buy now. If you haven't bought yet, you're not too late. I can just imagine the thumbnails, right? It's going to be crazy when we see this move. Okay, it stops out the short squeeze, the ultimate short squeeze. You stop out all these damn people that shorted, thinking that the bear market is continuing to the downside. So you basically, what the market makers then do is, because they need liquidity to fill their bags, okay, without moving the market. This is how they do it. They come and they fill up their bags over here, and then it drops. Because once this move happens to the upside, guess what happens over here? More liquidity builds up. More liquidity starts building up, because now people believe that the bull market is back. We've claimed this level. We sliced like a hot knife through butter through this level. I can just imagine, okay? Bull market is back. Where do people put their stop losses? Below the recent low. Okay, so you have the ultimate short squeezing opportunity over here. They fill up these short bags, and then it drops. And you stop out everyone that got bullish too quickly. And this forms a WXY structure. And I have spoken about this structure before. And I must say that this structure is starting to make more sense to me, from especially the recent price action that we've been experiencing. Okay, so guys, let me just clean up the kitchen over here. Let me switch on that scenario. It's interesting to have these conversations, okay? I know that Andy has done some really good technical analysis here on the smaller time frames, and I'm going to get to it in a second. But I just want to share with everyone this scenario, okay, that I'm keeping an eye on. And the only line that's important, I can actually switch it off. The only line that's important is this line, WXY. You have a W. We are now forming a X, and we're going to go down for a Y. That's all that's important. Okay, let me make it a little bit bigger so everyone can see it quite nicely. Right, let's make it a primary move. This is the move. But from a psychology perspective, it's also a beautiful move, okay? It's going to make everyone so goddamn bullish, thinking that the low is in. It's going to have that amazing short squeeze, okay? Stop everyone out. People are going to buy and long like crazy, and it then flushes them out again. And then you have completed, guess what? A three-wave corrective structure. And after you've completed a three-wave corrective structure, the bull market continues. So very interesting. And I do see this Y wave, if the scenario is going to play out, to end mid-April. Somewhere in mid-April, I see this scenario potentially playing out. I know that this little dump down here to the downside is scaring a lot of people. But for now, I think this low could be protected. I think this scenario for me is starting to gain in probabilities, because it makes sense from a psychology perspective, and also it makes sense from a three-wave perspective, where you've grabbed the liquidity, you're basically flushing out the market. You flush out all the shorts, you flush out all the longs, and then you continue to the upside. Let me know in the comments if you guys agree with this scenario. But I think from a psychology perspective, it's the perfect scenario, okay? It would, sorry guys, I just want to switch off my phone over here. It would be strange, okay, but it's still a scenario. It just carries lower probability. It would be very strange to form an A, B, C, and we're done. And then what you're forming over here is that contracting diagonal, okay, 1, 2, 3, 4, 5. You know, you're basically forming that contracting diagonal. You find support, and then you just rock and roll to the upside. It just doesn't look right. And I think what gives this scenario, even from a technical perspective, slightly lower probabilities than the WXY, is because the A wave is a expanding triangle, expanding diagonal. Okay, here you can count. Let me show you guys over here. You have a potential 1, 2, 3, 4, 5. And what do you have? You have an expanding structure. So it's not really the expanding structure that's the problem. Okay, I can still deal with this. I can still deal with that. What becomes the problem, it is extremely rare in Elliott wave theory to have two diagonals in the same structure. This is now where the scenario starts carrying lower probability from a technical perspective. To have a diagonal and another diagonal in the same structure is extremely rare. Never in invalidation, but it's rare, where the WXY starts carrying higher probabilities. So for me, the WXY still carries higher probability. Okay, so legends. I mean, Chris, thanks for asking that question. Mr. Dewald, do you think a mini alt season disbelief rally can occur while BTC makes its X wave? Yes, absolutely. And when I look at dominance, USDT dominance that we just looked at over here, what if, okay, what if this is the high for now? And we go back and we make a correction. Okay, we don't take the low, we just make a correction. That could be a mini altcoin season where we get that little bit of the explosion back to the upside. And then we continue and everything starts bleeding again. So when I look at dominance and I look at the WXY scenario, it kind of makes sense. What if dominance now starts going down and Bitcoin starts going up to go and complete its X? Okay, it's something to think about because it will pump money back into the crypto space. And obviously, I think that, you know, you will see some rallies. I think you might even see some meme coins do 100 or 200%. It always happens when we get those mini altcoin seasons. You get a couple of tokens that just goes ballistic to the upside. Right. Okay, cool, legends. Now, what I wanted to also say over here, the reason I think that the X carries higher probability, and remember, the X doesn't have to come up high, it can even form a lower X. It can even form a little bit of a triangle situation over here. Okay, let me do this. It can even do this. X waves, okay? I always tell everyone, a B wave is difficult to trade. But I can tell you guys now, an X wave is a nightmare. It's an absolute nightmare to trade. And the recent price action that we have seen inside of this range, this confusing chop to the upside, to the downside, you think you're going to get a 5 wave, then you get a damn 3 wave. You think you're going to go higher, then it turns around. It's just, this has been an absolute nightmare for most people to trade. And I've seen the comments even inside of Andy's live stream where people are saying that they're really struggling, even experienced traders saying that they are struggling to trade this range. Hopefully, you know, and more than likely, the experienced traders are getting stopped out multiple times without losing money, where some of the unexperienced traders are most probably taking a lot of losses during this range. X waves, okay, if this is a bigger X wave, are notoriously complex, extremely complex corrective structures that does not make any sense until it's finished. Then it makes sense. Okay, Y waves, W waves are the easiest. The W wave is the easier. A Y wave can be an easy structure. It could be a normal zigzag to the downside. It could also be a flat. It could also be a triangle. I mean, let's not get into that right now. But I think from a psychology perspective, I would like to see an X wave that takes this high. I would love it, right? I would love to see an X wave that takes $95,000. That would be a nice little psychology move. Okay, cool. So legends, let me clean up the chart, take this out the way, and let's do some technical analysis. And I mean, by the way, what is interesting about this X wave, it's such a difficult wave to count, but I have done the counts here already on the larger one. Let's see. Okay. You can see how confusing it is. You have an ABC 3-wave structure. Okay, remember, when you make a low and you cannot see 1, 2, 3, 4, 5, or you cannot see a contracting diagonal with 5 waves inside of it, and you cannot see a 1, 2, 1, 2, 3, 4, 5, 4, 5. If you cannot see a bullish structure, you are increasing the probabilities significantly that you're going to come claim the low, and that's what happened. Okay, you have to form a, if I saw a 1, 2, 3, 4, 5, if I saw that, I can tell you guys now, that retracement, I would have bought up like a crazy person with my stop below the low. Okay, I would have most probably, dollar cost average with the momentum to the downside with my stop below the low if I saw a 5-wave structure. I think the entire crypto world was waiting for a 5-wave structure here to the upside, and then we got a damn 3-wave structure. Right. So you have an ABC, now you have another ABC. This could now potentially be another A here onto the upside. We are now busy with a 3-wave B wave, which makes sense. And then we can go up for C to complete your X wave. So this is the simplest structure that I have for the X. It can get a lot more complicated. Okay, but we could potentially be forming an A. This is the 3-wave structure B that we're forming right now, where the low is still protected. And then you find that upwards momentum in an aggressive C wave to the upside. And these C waves, okay, these C waves, like what happened over here, you guys know C waves can get absolutely ballistic to the upside, okay, because I remember when we got this move here to the upside, how bullish people became. Look at this move. It's an ABC, okay. C waves can get very aggressive to the upside. So this is potentially the move that will make a lot of people bullish, okay? I just, disclaimer, please guys, disclaimer that this structure could turn out to be you could still form a triangle, okay? And then the X wave finishes over here and you fall to the downside. I'm just saying that this is a scenario that could play out in an X wave, specifically considering, okay, the psychology perspective as well. So a very interesting move indeed. Right, so legends, we could be forming that A, B, C, and now what I want to focus on is let's dive into this little structure. Remember to smash up that like, and if you'd like to come and trade with me, link down in the description. Yes, you select more, and oh guys, I have a new exchange. You all know about Weeks. 50% deposit cash back on your money that you deposit in your futures account, 25% discount on your trading fees. All you need is an email and a password. Some people really love bluffing, and they do have that special running at the moment, up 10% cash back on the money that you deposit in your futures account, and the more you trade, the more money gets airdropped into your account. So, and now I have Phoenix, okay? Phoenix has come to the table, and you can get up to 2,000 position airdrop when you sign up with Phoenix over here. I'm not sure if you guys know about Phoenix. I have known about them for quite some time. They've been around the block. They are a tried and tested exchange, and all you need is an email and a password. Right, so I am starting to trade here on Phoenix. It looks really good, really liking it at the moment. So if you guys would like to come give Phoenix a try over here, they have an amazing deal running at the moment. And okay, so maybe I'm going to start another account there, maybe another $200 or $500 challenge there on Phoenix as well. Okay, right, legends, that is your way to support the channel. And I give and organize you guys the best deals from the exchanges. Okay, now we need to jump into this monstrosity here at the bottom. Okay. There was a scenario that I highlighted. Do I still have it here? I think I do still. Where is this one? Okay. I don't know if this scenario still carries high probability from a contracting perspective. I know it looks a little bit broken because I'm not trying to figure out what is going to happen over here. I don't have a count for it, but I do have a target for it. So very strange, I know. But the one thing that concerns me about this structure is that even if I take the trend from this line, you drag it across, and I take the trend from number 2 to number 4, you have an expanding structure. Very rare. Okay, so I'm just going to throw the structure out the table or out the window. Okay, let's just call it out the window. And I'm going to take this. I'm going to take this out. I don't know if I want to take it out. Right, legends. What is interesting, okay, about this structure? Let's just look at this structure. From this C point over here, what is interesting from this point over here is that I can see a clear A, B, C in a flat. Then you have another A, B, C, okay, to the upside. And yesterday we actually spoke about that little scenario that got momentum to the upside. Okay, it went past the 1.618 and it formed a three-wave structure and it fell down. And what I can see now is potentially another three-wave structure to the downside. I think what is interesting about the structure is that using simple technical analysis, when you take a fib from the lowest point to the highest point and you drag it across, you can see that we have some areas of confluence. I'm going to be very interested in the 50% Fibonacci without looking at any other levels. Okay, this is an area that you want to pay attention to. If I do not see the price action at this level that I like and I know where to put my stop loss, I will wait for the next level. And I do like this pivot for potential swing failure pattern because I can just imagine that there's a lot of liquidity below this pivot. So if, you know, guys, and this is what could happen. You get the swing failure, you enter the long with your stop below the low, it goes up and it rejects and it goes to the next level, right? You can take advantage of that little pump to the upside. Make sure that you take profits when you hit resistance. It's as simple as that. As a day trader, that is a significant trade for the day. It could even be enough profits for 2-day trades. Okay. Because I think there is a lot of eyes. Okay, this is the one thing that's concerning me at the moment, legends. If you switch on your daily levels, you switch on your weekly levels, I often speak about this. There is so many people watching this zone. There's a lot of traders watching this zone at the moment. And I don't think it's going to be as easy as bam, bam. I don't think it's going to be that easy. I think it's going to be a difficult move to get into. I think it's going to be, okay, maybe if you're aggressive and you know where to take profits, you get in, you get out, because you could then go again, right? You get in, you get out, and maybe you can even go again. But I would at least expect 1-2 waves to the downside. And it would be nice to actually claim that pivot over there, but you could get the bounce here by the weekly level as well. Luckily, we have some levels that we can map out over here. So what is interesting about this structure, legends, and I know it's getting a little bit messy and all you see is ABCs everywhere, okay, but just bear with me over here. I actually want to take that scenario out there as well, just to not confuse. When you have a pivot high and you have an A, B, C, what does that form? That forms a W because you have an ABC and a W. So now this is where it becomes interesting. You have a W over there. Then you have another ABC and an X. And now you potentially are forming another three-wave structure to the downside to go and complete your Y. Now, this is very interesting because this Y wave has a target and I can measure it. Okay, so I know we have a weekly, we have a 50%, we have a daily. Now the question is, but where, my brother, are you going to bounce? Based on your Fibonacci retracement, where are you going to bounce? So you take your trend-based fib. I just want to make sure that I get that out the way so I can see the pivots clearly. You take a trend-based fib, very easy, from the top of W to the end of W to the end of X, and you drag it across so you can see your levels properly now, okay? First target that we are losing at the moment is the 1-to-1 extension where we also got the bounce. So you can see that the fib levels are being respected. This is your first target, very common for a Y wave. And now we are chopping at this level at the moment. So if there's a chance for a front run, okay, this is where it needs to happen. But then we have another level. The most common target is the 1.236, which has perfect confluence with the weekly level. Okay, so I will be paying attention specifically to this weekly level over here where we have the 1.236. It is very uncommon for a Y wave to tap the 1.618. Very uncommon. It can, but it's a very rare target. For the Y wave to tap the 1.618, okay, the maximum target is your 1.236. You could even switch on your 1.382 because I have seen Y wave targets tap that level as well, and that's a little bit slightly down. Where basically you're going to almost, if not claim the low, you have the 1.382 over there. So I think this could be the scary place that everyone that's going to long over here, okay, does not expect it to go down so lower, and then they start shorting because they think we've lost the levels, and then you bounce back up. Okay, so these to me are the most important levels. Make sure that you have your FIP from the high to the low to the high. That is, my friends, a WXY structure. You have a clear target, and a little bit more rare target is the 1.382, but it still gets tapped often. But the 1.618 almost invalidates. It almost invalidates a WXY, or just gives it significantly lower probabilities. So this is the zone, guys, ladies and gentlemen. This is the zone where I'm going to be looking for a long back to the upside. And I can treat each level as an SFP line. If I get stopped out at break even, I'll look at the next level or get back in if I see strength back to the upside. So for me, it is an area to pay attention to because that is a WXY target. Okay, so you basically want to see the bounce in the green box. Okay, and I'm going to make it a little bit smaller. There's your, let's just put it there. Okay. If price, okay, that would be very strange, legends. Let's take the noise out of the chart. Okay, let's clean up the chart over here. I want to zoom into the 5-minute time frame and see what is cooking here more locally. If price decides to rock and roll from where it is at the moment, I'm going to miss the long. I can just be honest with you guys. I'm going to miss it. Okay. It's when you take a FIB from the low to the high, you've already now tapped the 0.88. It's not really a bullish bounce. To get a bounce from such a deep retracement like this to the upside is very rare. So this increases the probabilities of maybe coming to claim the low, okay, and then we find support here to the downside and price starts reversing. I do not like the 0.88 tap for a bullish bounce, but I have to also say in the same breath that if the market makers wants to front run this zone, this is where they need to do it. Okay. Also, something that I've noticed, and I just have to point it out, is that for bearish continuation to the downside, when you take a FIB from this high to the low, okay, it is very uncommon for a 1, 2, because I see this is a scenario that some people are keeping an eye on. They say, no, this is a 1, 2, 3, 4, 5. It is a very, very rare target for a second wave, which increases the probabilities of whatever is happening here is corrective, and you're going to come take this high before you take the low. Right. So purely from a probability, okay, maybe not that low. I'm talking about, where's that other low? Is that the low? This low. Sorry, guys. This low. You're going to take the high before you take this low based on that. And it's just purely from a game of probabilities. There's a 70% chance that you're going to take the high before you take the low, but there's still a 30% chance that you could take the low before you take the high. But I like to trade in the name of probability, okay, because that is smart trading if you're trading with probabilities behind you. Right, so legends, there's a couple of ways you can look at the structure. Okay, I see you can look at the structure with a fib from this low to the high, and then you have that, you know, this scary level, the 0.88. Damn it, we have the weekly level here as well. If we tap the 0.88, we increase the probabilities of taking the low. Yes, I get it, okay? And this is why I like this level as the 0.618, because when I zoom out a little bit, it still looks bullish if we take that low, because now all you'll do is you'll take your fib from this pivot. So what I'm trying to highlight over here is if this gets really scary, yeah, and it does tap that 0.618 level, okay, it's still a bullish bounce looking at the structure. You could form a larger 3-wave structure to the upside. Okay. It has to be said, because I see that some people, if you zoom out even a little bit more on the 1 hour time frame, I see a lot of people, okay, are saying that this is either a 1-2-1-2, and we're going to rock and roll in a 3rd wave here to the upside. That's basically the WXY scenario as well. Okay, I'm also looking for a bounce here to go to the upside to go and complete that X wave, but I do not see it as a 1-1-2. So it doesn't really matter how you count the structure. I'm also expecting upwards momentum to at least $86,000. But it's not a 1-1-2. For me, it's not a 1-1-2. This could be an A, B, C. That makes more sense to me. It's a damn 3-wave structure. Okay, it's not a 1-1-2. Why do I say it's not a 1-1-2? So the result, and that's what I'm saying, legends, it sometimes does not matter how people count the structure. We often get to the same levels to take those trading decisions. Even myself and Andy, we will sometimes count the structures a little bit different, but we come to the exact same levels that we're watching for a trade. Okay, but just a little bit from an education perspective, if I go here onto the 15-minute time frame, okay, remember, in a W1, in a 1-1-2, W12, in a 1-1-2, this has to be 1, 2, 3, 4, 5. 3-wave corrective structure. 1, 2, 3, 4, 5. Has to. Doesn't have a choice. It cannot be 3-wave structures to the upside. Now, this is where the concern comes in. It looks, everything inside of this entire range looks like 3-wave structures. If you're counting this as the end of the impulse and you zoom into the 5-minute time frame, okay, let's go back there. Just wait for price to load up. I cannot, even on the smaller time frames, count 5 waves in this move. There has to be 1, 2, 3, 4, 5. There's a 3-wave structure. It's concerning for me. There's a lot of 3-wave structures. Even there was another move, and then I see, okay, some people are counting this as the end. Some people are counting this as the end. 1, 2, 3, 4, 5. Where's 4 and 5? It's a 3-wave structure. So the only thing I'm trying to highlight over here, legends, is that it's not, for me, it's not a 1-1-2 because it's not following the rules. Okay. The outcome, yes, is going to be exactly the same. But I just want to explain to everyone a proper 1, 2, 1, 2, 3, 4, 5, 4, 5 has 1, 2, 3, 4, 5. Clear 5 waves. 3-wave corrective structure, 1, 2, 3, 4, 5. That, my friends, is a proper W1, a W12, a 1-1-2. It's this structure. Yes, you can, on the, when you zoom out, on the 15-minute time frame, you could see that, okay, that looks like 1, 2, 3, 4, 5. Okay, maybe you have that contracting, which looks more expanding move there to the upside. But when you zoom into the smaller time frames, that's 3 waves. That's 3 waves. This is 3 waves. It's not 5-wave structures to the upside. Okay, this might look like a 5-wave structure when you zoom out, but when you nitpick at the small little pivots and price action there inside of the structure. It's not pretty at all. Okay, cool. Now, so legends, for me, this is the highest probable bouncing area, but now we have to talk about the what if scenarios as well. Okay, we have to talk about the what if scenarios. The what if scenario for me is if you do not bounce over here, I'm looking at the 0.618 and an SFP from this low. Okay, it does look like it's just going to smash all the levels. Okay, you have a weekly level, you have a daily level. We just need to be prepared for this scenario. What if it just cuts through these levels like a hot knife through butter? Here's your next area. You basically are playing a swing failure pattern from this pivot. There is, according to the liquidity heat map, a lot of liquidity below this low. Okay, so I wouldn't even mind being late for this trade. If I'm not in front of the chart and I cannot get in over there, I will wait for the break of the trend. I do have a trend line there already with my alarm set. If I miss this long, I want to play this breakout because I realize that it could be forming a nice little impulse to the upside to come and claim this weekly level. It could be a nice bounce to the upside. So even with a large stop loss, I know that from a risk to reward perspective, it will be worth the trade. Right, but I will still make sure that I only lose 1 to 2% of my capital, right? I'll just have to deploy less capital. And there's always another way to get into the trade. You might just have to adjust your position size. So the simplest way, legends, the simplest way, and then I'll go through some comments. If you do not know what to do over here, you do not care what to do over here, you do not know how to play swing failure patterns, I do think that the break of this trend, if I switch on my trends and I switch off all the other levels and I clean up the chart, this little bad boy over here, this is what I'm waiting for. And you guys can see I have my alarm set regardless of what happens, even if it front runs over here. Even if it front runs over here, I'm going to play the breakout with my stop below the low. I'm going to target the high. Right, but I will be TP1, TP2 and leave some of the position open for the weekly point of control above. Because the beauty about trend lines, it has pros and cons. The one bad thing about the trend line is you have a stop loss that is very far away. So you have to trade with less capital. Swing failure patterns, you can be quite aggressive because of how tight the stop loss is. Okay, so that's the downfall. The beauty about a trend line is that if you've missed the trade, okay, maybe it front runs from over here, or maybe it falls, it falls down a little bit deeper. And if you've missed the long entry, you can still rely on the trend and get an entry at the trend and then take profits when you start hitting resistance. So for me, that is why it's so powerful to have multiple trading strategies. Okay, and remember guys, if you'd like to come trade with me, links are down in the description where you get the best deals on exchanges, including Femex. I need to learn to pronounce that name. Femex. Right, cool legends. I want to look at CVD here at the moment. I know that we were building some local bearish CVD with this momentum here to the downside. Let's see. Yep, we're still building berry CVD. Local berry CVD is still building up, but I mean, it has a chance to front run over here at the moment. It has a chance. It's not pretty, I'll be honest. It's really not pretty because I was looking at the structure just now and I was like, okay, this looks like a three-wave structure. Okay, and there's no denying that this looks like a three-wave structure. I can also calculate the target for a three-wave structure. It is very strange that we are bouncing at the 786. Not really an ideal, okay? You want the one-to-one extension and the 1.236. And you will see that these levels also line up with the bigger levels that I've just highlighted on the WXY. It would be very strange for price to do this, okay? But there's another trading opportunity. Right, I would ideally like this box to be claimed before we go and claim the high. If price continues and maybe I'm sleeping, I don't enter this trade, I will wait for the retracement and then I'll make another trading decision. Maybe it builds that little bullish pennant, okay, that it usually does, and then it breaks out back to the upside. Then I'll play either that breakout or this breakout, depending if I am in front of the charts and I am awake. If I'm not awake, I will look for a next trading setup, okay, because I might miss the move here to the upside. It might happen 2 o'clock in the morning while I'm sleeping. But it would be nice because if, you know, this is a 3, sorry, no, got it wrong. This is a 5, 3, 5. So it is a 1, 2, 3, 4, 5. Okay. 1, 2, 3. It's a very short 3. I was this morning in our Legends Pro community, I highlighted this level for a short. And we literally just front run it. I did not do any trades today. Every single level that I was eyeing got front run, or I was busy with other things and I missed the trade, because the trade I wanted to get in and I was kind of angry that I didn't get into the trade was the daily level. I wanted to get in at the daily level, a swing failure pattern from this low. I was busy with other things. I could not get into this trade. And then price bounced here to the upside. And then I told the legends, well, that is a shorting opportunity. Okay. And if price goes higher, I also like these highs over here. And then ever so slightly front runned it. Okay. So whoever, and you know, luckily, as always, I did say in my update this morning, and the pro members, if you are here, you will know that I've said this. If you have played a long over here, if you are in the long, when you start hitting resistance, please pay yourself. That's what I said. Please pay yourself. I know I'm looking for a short over here because I want to see an SFP from the high. And if you did not pay yourself when you played this long, you would have now been stopped out at either break even or at a loss, depending on where you had your stop loss. Made $50 on that bounce from the daily level. $700 scalp. Absolutely amazing. Okay. If you just, you know, guys, there's so many trading opportunities. Okay. They are everywhere. I think when you have a complex structure like this, when you hit, you know, when you're longing and you're hitting resistance, just pay yourself, because you don't know what's around the corner. When you are shorting, okay, and you start hitting support, pay yourself. Because if you are entering trades thinking that it's going to be that bounce, or you're entering a short thinking that it's just going to fall and make all-time lows, and you don't take profits in a confusing structure like this, you're not going to make any profits. Okay. Ooh. One thing I was still busy. Sorry, legends. I'm distracting myself over here. So I can see 5 waves in here. 1, 2, 3, 4. Sorry. Let me do that again. You have 1, 2, 3, 4, 5. Then you have a 3-wave structure up, and now I can see another 1, 2, 3, 4. This has to be the end, and I'm looking for another 5 to the downside. Now the question is, did we tap the 0.618? That is going to be the question. If I take a fib from the high to the low, not good, right? When you tap the 0.88, you invalidate the 4th wave. It's not an invalidation. Let me just rephrase my word. It's not an invalidation. It significantly reduces the probabilities that you are going to have a 5th wave and then continue back to the upside. When you take a fib from number 2 to number 3 and you tap the 0.618, right? The only hardcore invalidation for the 4th wave is if this price action goes into the territory of 1. 1, 2. So it's not allowed to tap this level. That's the hardcore invalidation. But now it looks like price wants to continue here to the upside. This could potentially be that front running scenario. Very strange that it tapped the 0.88 and now we're getting the bounce. Okay, very strange. Right, legends, it is what it is because I want my levels to get hit. As a technical trader, if my levels do not get hit, I don't just blindly jump into a trade. If I'm waiting for my levels to get hit and it front runs my levels, I will exercise a different trading strategy. So if we do successfully break out over here, closing multiple candles outside of the trend, I will make a trading decision over here. Yeah, I mean, CVD is actually... we invalidated that one. Okay, there's no berry CVD at the moment anymore. We've invalidated that pivot over there. We've claimed it above. So it looks like price could potentially continue here to the upside. A very strange three-wave structure. Okay. Now the question is, have we formed a 5-3-3? Anyways, it is what it is. And this is why I have the trend. So if I'm awake and we have a successful breakout, I'll make a trading decision. It's just, my levels didn't get hit. I'm not gonna FOMO into a trade over here, right, legends? I will just be patient and see what price offers me next. Right. Let's go through some comments. It's not nice that we tapped that 0.618. Okay, not nice. For one more leg here to the downside, I don't like that. And let's see, I'm now curious to see how does this scenario play out. If it does do this, then we're going to know, okay, we've been talking about that level that invalidates the fourth wave. We tapped it, okay, we should have longed. It was such a beautiful stop loss, 0.88 tight stop loss. Now we're getting the momentum to the upside. It is what it is. And I would rather miss a trade than FOMO into a trade. That's just my rules. My trading rules is I will rather miss it than look for next trading opportunity. Okay, let's go through some comments. Smash that like button, legends. Yes. Is it me or do front runs seems to be happening more frequently as of late? Yes, Mr. Watch and Listen, everywhere. Okay, I was looking. I had my alarm set over here for the short. Okay, but you can see we're calling the shorts where they're supposed to be called. We did fall. We just front run it by what? $50. So we said, rejection zone, and we fell. So, we wanted to short over there. We just missed it by like $50. Okay, front run. Now we're waiting for this zone. Now look at what's happening. We're getting the bounce here to the upside. So it's just a front running orgy happening here at the moment. Okay, but there's always another way to get back into a trade. Okay, even if let's say I fall asleep, I'm not awake with the breakout. I miss the breakout and price just continues to the upside. At some point, price has to slow down and come back for a correction. It has to. It's part of the game. Every impulse has a correction. Every correction has an impulse. Okay, at some point, price has to slow down and come back. And this is where I'm going to be very interested to play along, because there could be another trend forming over there and I play that breakout, or there's maybe a point of control, or you find support above these highs, which will now be support. I will long that level. I do know that I will catch the momentum to the upside. Somehow there's another way to get into this trade, because this could be an epic trade to at least $86,000, if not $95,000. I always get ready when I have massive profits. Greedy. I always get ready. Yes, Sheil, I think a lot of people, you're not the only one that struggles with that. Okay, a lot of people, I think the first thing that most people start getting right is the technical analysis part. That's usually the first thing that people start nailing, is exercising their trading strategies. Okay, they play the breakout, they play the SFPs, they're like, okay, I'm nailing it now. It starts making sense. The second thing they then start struggling with is risk management. You're risking too much, you're going in with too larger position sizes, and then when you do take a knock, you have to almost, go and cry like a baby in the bathroom because you burned a hole in your account. And then at some stage, you start mastering the risk management as well. But then you will not believe when I tell you guys that most people that have mastered technical analysis and they've mastered risk management struggle with profit taking because of greed. There's more people struggling with where to take profits than with risk management and technical analysis. Okay. You guys do not, and I often say this, you do not have to know the crazy technical analysis that I do from an Elliott wave perspective, WX, Ys, FIB retracement. You do not have to know all of that to be a successful trader if you have mastered why you are entering, because your trading strategy is signaled for you to enter. Okay. Where are you putting your stop loss? And where are you taking profits? And you follow those rules that you've set for yourself. Remember to smash up that like button. Dewald, link back testing the trend line. I saw. Okay, yesterday I mentioned link. Yesterday I did mention link. Where's Mr. Link over here? I said I want to play the breakout. We got the breakout. Okay. And can you guys see how important it is to take profits? Yesterday I spoke about this. We were here. And look at where we got the rejection. At resistance. So if you did play the breakout, you should have paid yourself at least as a TP1. Okay? And usually a TP1 for me is 50 to 60% profits. At least. So if you took 50% profits over here, okay, and you got stopped out here at the lows, you should still have 50% profits because this is TP2. But then, I know the greed monster kicks in and you're like, I've caught it. I've caught it. It's going to go. And then it doesn't. It stops you out. I can tell you guys that when you are, and I have alarms going off, it's most probably BTC breaking out over here. Not sure why that alarm is going off. Anyways, let's go through some more comments. Okay, because I lost my strain of thought. BTC gonna hit 90K this week and then to the moon. So TM, do you think that the low is in? I think there's a higher probability, okay? From a technical perspective, if I go here onto the 4-hour time frame, okay, and I need to clean up the kitchen over here. It just has to be said, from a technical perspective, there's a higher probability to take the low before we take the high. So there's still a lot that can happen, but the probabilities are higher to take the low before we take the high. The corrective structure is too short in time. Big problem. Okay. And I can show you quickly. If I go onto the daily time frame, clean up the chart, and I think I do actually have it here already prepared, so I don't have to go and draw everything again. Timing. Let's go and have a look at timing. So this is the problemo. And this is just one scenario of why I think, okay, the low is not in from a technical perspective. When you take a time FIB, do you guys know where the time FIB is? Yeah, trend-based FIB time over here. Okay, and you snap it onto the low that we've made on the 5th of August, and you snap it onto the highest point of the structure. From a timing perspective, this low was made before the minimum requirement from a timing perspective. This means that your impulse and your corrective structure, your correction is too short to correct the impulse. It's too short. It needs to still, even if it goes up and it then makes another low, okay, that's the X scenario that I'm talking about over there. That's way better. It's after the 0.382. It's in the zone where you want price to make the low. So purely from a timing perspective, This low was made before the minimum requirement. And the larger the time frame that you are analyzing, the more accurate the technical analysis becomes. Because I'm not sure if it was last night when I did the live stream, we spoke about the exact same thing. And for that, I have to go into the 1 minute time frame, because there was something that happened here on the 1 minute time frame. Where was it? It was here. Okay, let's go to the 1 minute time frame, because I spoke about the exact same thing. Oh man, price action just needs to play ball. We were looking at this structure. Do you guys remember this little bad boy over here? Okay, let me zoom in so everyone can see. Okay, and I think I actually still have it saved. There we go. We were looking at this structure. 1, 2, 3, 4, 5, A, B, C. But there was one problem. There was a problem over here. When you take a time fib from the low to the high, we finished the low before the 0.382. Very close, but before. But remember what I said when I was in the live stream. On the smaller time frames, rules gets broken a lot more often. The larger the time frame, when you start going into 1 hour, 4 hour, 8 hour daily time frames, these rules very, very, very seldom get broken. But on the smaller time frames, I have seen rules get broken. Sometimes it closes the corrective structure before the minimum target. Sometimes the fourth wave, it taps the 786 and it still makes a damn fifth wave to the upside. I have seen that smaller time frames like to break rules from time to time. But the larger the time frame, the more accurate the analysis becomes. Right. Cool. Let me go through some more comments. Anthony, Dewald, could you take a look at Redstone, please? It seems to keep quite stable, right? Guys, I will take a look at Anthony. I will take a look at some altcoins tomorrow. Okay, I don't really particularly want to jump into altcoins today. It is quite late here in South Africa, so I want to get into bed. I don't want to spend too much time on more technical analysis. Is this your primary high time frame count? Initial high time 1 2 meaning triple 1-2s. Ooh, what? Triple 1-2s? Is this your primary count? Meaning 1 2. Daniel, I'm not sure what you mean in terms of you mean the daily time frame. No, it's not my primary count. Anthony, no problem, sir. Okay, I don't want to jump into altcoins right now, legends. I want to just wrap up the Bitcoin technical analysis, and then, we can do a little bit more in-depth technical analysis and maybe look at some of your favorite altcoins tomorrow. I do see that when I go into altcoins, people leave the stream. So not everyone wants to look at altcoins at the moment. Okay, so I will do that tomorrow and leave a section for the last part of the live stream, and we can go and discuss some altcoins. Who asked that question? Daniel? No, it's not my primary count. There's something that needs to happen for the primary count, okay, before I will give it the highest probable scenario. My primary count, based on the data that I have today, is to still make one more high. And remember, when I did do the technical analysis on the 1-1-1-2 or even the 1-1-1-2 here on to the upside, I did say that $120,000 is the highest probable scenario at the moment. So my primary count at the moment is to still form a higher low and go and take at least $120,000. Once we get to $120,000, my primary count might change depending on what I see next. But for now, this is my primary count. Okay, the 1-1-1-2 or the 1-1-2 combo that you're talking about to the upside, where we could potentially even hit $400,000 Bitcoin. There's something that needs to happen first before that becomes my primary count. But it is a possibility. It has a probability. It has a higher probability than a bear market at the moment. And I think, and this is maybe where some people are getting confused. For us to start a bear market now to the downside has a lower probability than $400,000. But the highest probability scenario is 120. And then we can go into a bear. Then we can start talking bear market, or we can start talking $400,000, but it's not time yet. But Daniel, very good question. Okay, what impact you think tomorrow if I'm in? I don't know, right? We had bullish CPI data last week, if I can remember correctly, and price tanked. Okay, so maybe if we get good news tomorrow, we can expect some downwards momentum. If we get bad news tomorrow, then maybe we're going to get a bullish fake out news here to the upside. I have no idea, but I will have my levels marked out, and depending on which level hits to the up or to the downside, I will make a shorting and longing decision. But I don't particularly enjoy trading news events. It's not my cup of tea unless I'm already in a trade. Okay. Interesting. I have been pleasured a lot or what impact? Okay. Right, legends. Remember, the links that I use to trade is down in the description, and I have a new partner, a new exchange. Okay. It's not a new exchange like they've just started. It's an exchange that's been around the block, and I have partnered up with them, right? Femex, and you get that up to $2,000 position airdrop by signing up. All you need is an email and a password. So I have Weeks, Bluffin, and Femex. If you want to give this exchange a try, go and check them out. You only qualify for the sign-up bonuses, right? The large sign-up bonuses by using the link down in the description. Right, legends, that is unfortunately all I have time for today. Have yourselves an amazing evening, and I will see you all tomorrow. Cheers for now.